Good evening, everyone. I'm Vaishnavi Vaiti from Kirin Advisors. Welcome to the virtual roadshow of Star Imaging and Path Lab Limited. Today, we will provide a brief overview of the company and its innovative business model. Star Imaging and Path Lab Limited is an ABL accredited diagnostic services provider offering comprehensive pathology, radiology, cardiology, and neurology service in Delhi, Uttar Pradesh, and Maharashtra. Nasik. The company operates in B2C, B2B, and B2G model through an integrated service network to meet diverse diagnostic needs. From management team, we have Mr. Pawan Gupta, Chairman and Managing Director. Good evening,
Hi,
Pawan sir. Welcome.
hi everyone. Hi Vaishnavi. Thanks for the
Hello.
opportunity. Hi.
We also have Mr. Azad Ali, CFO.
Hello, everyone.
Good evening, Azad sir. Welcome.
Good.
From Share India Capital Services Private Limited, we have Mr. Kunal Bansal, Vice President. Good evening, Kunal sir. Welcome.
Evening, how are you? Good evening, everyone. This is Kunal Bansal from Share India Capital.
Thank you. Now I hand over to Pawan sir to tell us the journey of the company. Over to you, sir.
Uh, Thank you, Vaishnavi. Hi everyone. I'd like to start with that we have a very long history and a very long journey that we would like to explain. It's almost a 50-year-old journey. We started off as a very small diagnostic center in West Delhi in 1978. And at that time, there were very basic services available in the market in the form of very few blood tests and very simple in radiology, I would say, X-rays. So we were the ones that started off providing all these services under one roof, pathology and radiology. Since then, we've added on a lot of services, ultrasounds, X-rays, CT scans, MRI, etc. And we've grown a lot. Uh, can you move on to the presentation then?
Yes, sir. We will start with the presentation.
Yeah. During our journey, we got a lot of accreditations from NABL, NABH, etc. And we started off as a proprietorship company, and we incorporated ourselves in to a private limited in 2004. Currently, we are running around 24 diagnostic centers, which out of which four centers are in Delhi, and the rest are out of Delhi. We operate in three models: a B2G and a B2B and a B2C model. The B2C model is where we take the normal local doctors, local patients, etc., who we provide services to. In the B2B model, we provide services to the local nursing homes and hospitals, the high-end services that did not have in-house. And in the B2G model, we provide services to the government. Wherever there are public-private partnerships, we try to take part in those and we provide services there. Can we move on next? To the next slide. Some key milestones and how we've expanded. In 2004, like I said, we incorporated the company as a private limited. Then in 2011, we acquired a couple of standalone proprietorships and grew in size. In 2017, we started a Star Edu program also as a company, which was to upskill and train our existing staff and to get new staff as we were expanding. So this was also something that we also tied up with the government with Skill India program, etc. And we trained a lot of technicians, etc., to use in-house, as well as we provided those that staff to local hospitals and nursing homes also. Can you move on next, please? This is a little bit about our team. We have a lot of senior advisory board members and directors. Our radiology head is Dr. Samir Sood, who's been with us since around 1995, and he's one of the most senior radiologists in the area, or I would say in Delhi. Dr. Vimal, Dr. Virmani, they have been outstanding in their own fields. One is a pediatrician, one is a dentist. Chaya, Neelam, they've been very good in quality management and patient handling. Dishant has been a strategic financial advisor. Can you move forward? Like I explained, we work in three models: B2C, B2G, and B2B. In the B2C segment, like I said, we've been the leaders in bringing in technology, etc., into the market. And in our journey, we brought in the first digital X-rays way back in 2001. Digital X-rays are something that reduce your X-ray radiation by around 90%. Okay, so we were the first ones to bring that into Delhi. Then we brought in the first 4D ultrasound. Then we brought in the first non-invasive cardiac angiography. So, due to these technological advancements, we were able to make a good reputation and a good rapport with our local doctors and our local patients. So that grew our B2C market. In the B2G segment, the government has a plan of public-private partnerships. So they keep coming out with tenders for the same. So in this, we participated in a few tenders and we were lucky enough to win a couple of tenders. And currently, we are operating 20 centers under the B2G segment. In the B2B space, like I said earlier, we provide services to the local nursing homes and hospitals, which sort of high-end services, which they do not have in-house. Can we move on? This is a little bit about our public-private partnerships. We are currently running around 20 centers in Uttar Pradesh, in Nasik, and one in Delhi. Can we move on? In our journey, we've also made a lot of advancements in our technological and software side, in which we've developed the first cloud-based laboratory information system so that all our centers today are connected. And we have an in-house teleradiology setup also, through which we can report all our centers centrally, and that makes our quality management, etc., much, much better. Can we move on? Like I said, we are operating in three geographies currently: Delhi, Uttar Pradesh, and Maharashtra. Can you move on? Can you move on? Next, please. Yeah. Okay. I'd like Azad, if you can take over from here.
Yes, definitely, sir, definitely. Hello, everyone. Myself, Azad. We would like to brief, as the sir has already mentioned, you the business runs in the three different segments into B2C, B2B, and B2G. And we are the actually diagnostic services where we provide both radiology and the pathology services. So these are the tests we have conducted from the last three financial years, as you could see in front of you. These are all the figures in the thousands. And there is a one more figure is there, that is average revenue per test. That is a blended average revenue per test. That is, we cannot comment on the single test. If you see for the single test, if the revenue is same, no, the revenue is not the same, because for the pathology the rate is different, for the radiology space is different. So this is the blended average revenue per test that can be seen here. Can we move to the next slide? As we have mentioned, or as we told about that, we run in the diagnostic services. We have different departments are here: the radiology, pathology, cardiology, neurology, and urology. These are the revenue bifurcation of from these all these departments that we have in front of you. For the I would say the total of this figure for FY23 was 58 CR, for FY24 is 78 CR, and for FY25 is 83 CR. Next slide, please. And now I would like to brief about the financials point of view. The top line for our company for the standard point of view for the FY23 is the revenue is 58 CR, for FY24 it's 79 CR, and for FY25 it's 83 CR. Keeping our EBITDA margin for FY23 is 5 CR, keeping the ratio for the 10%. For the very next financial year, FY24 is 28%, which contributes to 22 crore to the EBITDA margin. And for the next FY25, for that we have closed just now, it's 34%. And for a PAT margin that has been for the last three financial years are there, that for around 57 lakh, that is 1% is there. For the next financial year, for FY24 is 12 crore. And for the next, the current financial year, the FY25 is 15 crore, keeping our PAT margin around 19%. Next slide, please. Yeah, these are the few ratios from the profitability ratios or the leverage ratios that you could see here is from the investor point of view or for the company point of view also. The return on equity for all those figures are for the last 3 financial years. The return on equity FY23 is 3%, FY24 is 49%, FY25 is 41%. Return on capital employed is FY23 4 is 5% is there. For FY24 is 29%, FY25 is 29%. Debt to equity ratio that talks about as a standard ratio, you could see the 1:1. Here for FY23 is 1.40, FY24 is 0.98, FY25 is 0.70. And debt service coverage ratio is for FY23 is 1.27 times, FY24 is 3.95 times, FY25 is 3.73 times. These are the few another ratios for the valuation ratios. I would say the current ratio FY23 is 1 times, FY24 is 1.63 times, for FY25 is 1.96 times. The receivable turnover ratios are there. FY23 is 3.46 times, FY24 is 3.13 times, FY25 is 2 times. Hence here the earning per share is there for FY23 0.42 and FY24 is 9.14, FY25 is 11.79. And the net asset value per share as can drive is FY23 is 14%, FY24 is 23, and for FY25 is 34. Can we move to the consolidation figures? Yes. These are, as the sir has already mentioned, as we have started one of the venture in the 2017 of the Star Edu, that is our only subsidiary that has contributed to our revenue here in the consolidated. So these are the consolidated figures for the last 3 financial years. FY23 is 58 CR, 59 CR is there, FY24 79 CR, FY25 is 83 CR, and the EBITDA margin and the PAT margins are there. FY23 is a 9%, FY24 is 28.5%, FY25 is 34%, and the PAT margins are there. FY23 is 1%, FY24 is 15%, and FY25 is 19%, keeping the amount to 15 CR. Next slide, please. Again, the profitability ratio and the leverage ratio that as we have discussed just now. For the FY23 is 3%, and then FY24 is 50%, and FY25 is 41%. And return on capital employed is there for FY23 is 5%, FY24 is 29.69%, and FY25 is 29.92%. Keeping our debt to equity ratio, FY23 is 1.40 times, FY24 is 0.918 times, FY25 0.69 times. And debt service coverage ratio for FY23 is 1.27 times, FY24 3.97 times, FY25 3.75 times. Few valuation ratios or the current ratios are there. For the current ratios for FY23 is 1 times, FY24 1.63 times, FY25 is 1.97 times. Receivable turnover ratios FY23 is 3.47, FY24 is 3.14, FY25 2 times. Earning per shares for FY23 is 0.13, 0.43, FY24 is 9.20, FY25 11.80, and net asset value per share for FY23 is 14 rupees, FY24 23.22, FY25 is 34.93. As you can see from as our revenue from the segment work in the 3 different segments, B2C, B2B, and B2G, and these are the few of the things that we could say the expertise or with the market position that we have right now because of the legacy of the last 50 years is there. The centralized teleradiology hub we have here, top 10 revenue customer of 60% is top 10 revenue customer are there. We have a strong B2G revenue visibility also that we could see. For the next slide, please. Yeah, from the growth point of view or for the future perspectives, would like to hand over this call to Pawan sir.
Thank you, Azad. Sorry, I was mute. Yeah. So now, going forward, we're looking to grow in the segment of oncology also. We're entering oncology. We will be entering genetics testing because, as everyone knows, currently the kind of lifestyle and everything that we follow, the kind of environment we live in, it is not very conducive to our health. And the way the the diseases are increasing, cancer is one of the fastest growing diseases, and we'll be entering that segment too. Then we're also looking at organic growth in terms of increasing our number of centers and increasing the existing capacity in our existing centers. We'll also be looking at new government tenders, which we are currently also bidding for, and we'll be entering new B2G spaces also. We are also looking at inorganic growth in terms of acquisition of centers, and we are also looking at the tier 2 and tier 3 cities where we are operating in the B2G segment. We will be also looking at the B2C segment in those cities. And move on next. Azad, can you take this one?
Yeah. These are the few financial figures that we have discussed above the slide. The revenue that with the contribution of the revenue from the three different segments, B2C, B2G, B2B, that is 36%, 58%, and 6% are there. And for the FY21, the capital efficiency ratios for the return on equity FY25 is there. For compounding annual growth rate that you could see 10 to 12% for the favorable industry, that practice would be there. Can you move to the next slide? Over to you, Kunal sir.
Thank you, Azad. So everyone, the issue size is basically a combination of fresh issue and offer for sale. A total issue size of 48,92,000 shares, with a breakup of 39,20,000 shares as a fresh issue, and OFS for 9,72,000 equity shares. The price band for the issue is 135 to 142, and at the upper price band, the issue size is 69.47 crores. So approximately 55 crores for the fresh issue and 13.8 crores for the OFS portion. The anchor has been closed today, and the list will be uploaded on the BSE website within few hours, and everyone will get to know the anchor list. And the issue is opening tomorrow, so all the best to everyone, to the team Star Imaging, and to Share India as well, and to all the investors also. And the issue is closing on 12th of August, that is Tuesday, and the QIP portion is 21,75,000 shares pre-anchor, and post-anchor number of shares will be updated on the BSE website. The non-retail portion is 6,57,000 shares, and for retail 15,28,000 shares. The company has reserved a quota for their employees as well for 52,000 shares, and the market maker is Share India Securities Limited with a reserved portion of 4,80,000 shares. The pre-issue capital is 1 crore 35 lakh shares, and post-issue the capital will be 1 crore 74 lakh 20,000 shares. So the at the current market price, the upper price band, the market value will be 248 crores approximately, and the promoter and the promoter group are holding almost the 100% of the portion, and post issue that will be approximately 72%. So and the issue is listing on BSE Emerge platform, and the lot size is basically 1,000 shares for the issue, and you can trade the shares in multiple of 1,000 shares. Next slide, Annie. So these are the object of the issue. The company is raising funds for for working capital for 25 crores and repayment of some bank loans for about 12 crores, and the company is going to expand its machinery lineup, and the capex is for that 514 lakhs, and the rest will be GCP and issue expenses. Next slide, please. So thank you, everyone. Pawan sir, would you like to conclude some remarks?
I'd like to thank everybody. Thank you, Vaishnavi. Thank you, Kunal, for the opportunity. And I would just say that looking at our own selves and our own families, if you look at our current lifestyles, health is one thing that we should all be aware of and we should all take care of. And prevention is better than cure. So that's all. I'll leave it at that. Thank you for the opportunity.
Right. Let's start with the Q&A session. I request all the participants to post your questions in the comment box. So we have first question from Mr. Arav Banerjee. Radiology forms a major portion of your revenue. What's your strategy to grow other verticals like pathology, neurology, and cardiology?
Hi. So, neurology and cardiology also form part of radiology as what we take it, and pathology we take only as the laboratory part of it. So, we are in expansion of our laboratory also in form of we're going to add on genetics. And currently, our portion of revenue from radiology is more because we have more number of centers and equipment in radiology. Like our B2G segment is purely radiology.
Okay. Next question. Aditi Menon, how do you plan to expand home diagnostics and digital reporting services?
After COVID, the home diagnostics business has seen a sharp increase. And in this segment, we are planning to introduce not only what is commonly available as blood tests, but a lot of radiology services also we will be bringing to your home. And the digital reporting services, we already have that in-house, and we provide digital reporting services currently also.
Okay. Next question. Ajay Gupta, AI tools और EMR integration में की गई इन्वेस्टमेंट से आपके ऑपरेशंस और पेशेंट आउटकम्स कैसे इम्प्रूव हो रहे हैं?
So EMR और इसमें जो investments की गई हैं, that is to, I would say, to engage the patients and to retain the patients, and it is a tool that is still being adopted in the market. If I ask any of you, how many of you do have an EMR for yourself, or do you keep your reports or everything in an EMR? I would say most of the answers would be no. So it is still a nascent stage. We have the facility, but it is under adoption.
Okay. Next question. Ganesh, our receivables have grown 3 over last 2 years. Given the 58% of our revenue is B2G, do we see increasing receivable days as a risk for the business?
Increasing receivable days is a risk for any business, but the growth that you see in our receivable days is due to small facts. Sometimes in B2G segment, at year ends, the government doesn't have funds. So sometimes funds are delayed there. And especially our funds have been delayed in the Delhi project because as everyone knows, there was problems with the health ministry, etc. But they've all been resolved, and the days do not increase as such.
Okay. Next question. Amandeep Dosanjh, what's the role of the central teleradiology hub and how scalable is it?
So the point of our teleradiology hub is that we are able to report any kinds of CT, MR, X-rays centrally from our central location across India and abroad also. Currently, we do not have any contracts abroad. We are in talks for them. But scalability, if I talk about, it is scalable to any extent, and our software is capable of that.
Next question. Yash Mistry, can you explain your overall business model and how it has evolved since inception?
So our overall business model has been to provide diagnostic services in the market as and when required and what is available. So the USP that we've had is that we've brought in the latest technologies that were not available in India, and we've been the first ones to bring some to Delhi, some to North India. Like I said, digital X-rays, non-invasive cardiac angio. Way back in 2003, I brought that in, and that was the first in North India. So that has been our overall journey, and we are currently also evolving. So it is not that evolution stops.
Next question. Ganesh, within diagnostics, the pathology segment is considered more scalable due to the capital-intensive nature of radiology segment. How do we plan to scale our business given the capital constraints?
So, like I said, we are expanding into the B2G and B2C segment. So, as and where the kind of tender that comes up, if it is a pathology tender, we would bid for pathology, or if it's radiology, we would bid for radiology. Yes, radiology is capital intensive, but then again, the revenues in radiology are also higher than in pathology. The differential is in the number of patients that are required to do the same amount of revenue in pathology versus radiology. I would say it's a 1:100 ratio. Okay, so like the number of patients required are much more. So, and we've been a technology-driven company, so we've offered the latest in radiology segment, and that has been one of our USPs.
Next question. Sai Arora, how do you plan to scale your operations in tier 2 and 3 cities?
So in the tier 2 and tier 3 cities, we are looking at inorganic expansion in terms of acquisitions, and also we are looking at the cities that we are already present in the B2G segment. We are looking at those cities which are conducive for good B2C segment. So we're going to enter those cities as well.
Next question. Mithilesh Yadav, PAT has grown significantly over the last 3 years. What has been the biggest contributor, operational leverage, pricing, or segment mix?
I would say it's a more of a segment mix, and also that we got a couple of government tenders which also contributed to our business.
Next question. सुदीप शास्त्री, स्टैंड अलोन डायग्नोस्टिक फैसिलिटीज एक्सपांड करने का आपका क्या रोड मैप है?
Standalone diagnostic facility, I would say you're talking about the B2C segment. So, like I said, कि जो existing facilities हैं, उसको improve करने का, उसमें departments improve करने का, like oncology add करने का, genetic testing add करने का, ये road map है. Plus कुछ नए centers भी हम लेके आ रहे हैं.
Okay. Next question. Shruti Tavre, what are the strategic benefits of being present in B2G PPP segment?
Strategic advantages are basically we get a very safe place, safe environment to work in, and the kind of places that we do get are derived of basic facilities also. So we get a good rapport with the patients, etc. there. So we have the opportunity of growing in that segment and putting other facilities if available.
Next question. शंतनु ओझा, रेडियोलॉजी और पैथोलॉजी रिपोर्ट के लिए आप टर्न अराउंड टाइम कैसे मैनेज करते हो?
अलग अलग टेस्ट के लिए अलग अलग टर्न अराउंड टाइम होता है. आई वुड से 80% ऑफ द टेस्ट का टर्न अराउंड टाइम 4 to 5 आवर्स के अंदर होता है. वी मैनेज दैट टाइम.
नेक्स्ट. भारती अग्रवाल, व्हाट आर द बिगेस्ट रिस्क टू योर बिजनेस?
As such, I would say healthcare में ऐसे ज़्यादा कोई बड़े रिस्क होते नहीं हैं. The normal day-to-day operations, उसी में कुछ problem हो तो that is one of the risks. Otherwise, there are not very many regulations. If you're meeting all your quality standards, if you're accredited by the correct agencies, then I don't think there are any risks to the business.
Okay. Next question. Arjun Verma, what are the operational challenges in managing 24 centers across Delhi, UP, and Maharashtra?
So the operational challenges are a little bit of logistics. Other than that, we have a good quality management system, and we have internal as well as external audits for all these centers. So because of the compulsory requirements of regulations like ARB and NABH, etc., all our centers are accredited, and we do have an external audit also every year. So we're able to manage pretty well.
Next question. Anandi Mittal, how are you ensuring consistent service quality and standardization across all your diagnostic centers?
So in the earlier question also I answered a bit of this question, is that we are accredited by NABL and NABH, and we have AERB certifications also. And under these certifications, there is a compulsory external audit, and we have our internal audits also conducted. So we're able to maintain standards. Because healthcare is one segment in which you cannot afford to make mistakes. And if you do make mistakes, that's the end of you, sort of. And we build our reputation and everything based on our quality.
Next, Shubham More. Are there any upcoming collaborations with hospitals or health tech platforms?
Uh, yes, they are, but I will not be able to talk much in detail about them.
Next question. Astik Kumar. What are the key factors that differentiate your proposal during government tenders compared to peers?
Mostly the tenders are based on two criterias. One is a technical qualification and one is a financial qualification. So technically, I would say we do have a few peers in the market that we compete with, and those conditions are set by the government. That how many equipments do you have, how many patients you've done, and basically on your experience and your quality levels. On the financial side, they ask. Sometimes it might be a rental, or sometimes it might be a discount percentage. So on that we need to bid, and that is where the competition.
Next question. Mayank Saraf. What is our hit ratio for government tenders and what is the average ticket size of such tenders that we participate in?
Uh, it's a very broad question, so I cannot give it a very specific answer. But I would say that till date we've bid for around 6 tenders, out of which 3 we won, and one was cancelled, and two we were L2.
Next, Suresh Kulkarni. With diagnostic sector CAGR projected at 10 to 12%, how do you plan to outperform industry growth while maintaining profitability and asset-light efficiency?
Uh, Mostly the numbers that are taken out in the sector are based on pathology companies which are predominantly present in the market. There is no as such standalone comparison with diagnostic centers. And because our business being more focused towards radiology, that is why our revenues are a little higher and our profitability margins are better.
Next question, Vishal Agarwal. With adoption of AI-based tools, how do you measure ROI on this tech investment and not just in efficiency but in accuracy, compliance, and patient outcomes?
We are not using any AI-based tools to do our reporting as such. We are using AI-based tools for ease of doing business or ease of our movement of our data across. It is not that the AI is reporting anything. So, and as such, we have not made any huge investments into tech. It is just our day-to-day operations that we've improved, and we've incorporated these technologies. We've developed them in-house, and we use them.
Okay. Next
It is
question.
more for maintenance of a tag rather than quality.
Okay. Abhinav Verma, what inspired your expansion into tier 2 and 3 cities, and how do you envision the next phase of that journey?
We were inspired by the public-private partnership that was offered by the government. And once we entered there, we saw that the hospitals, etc., that we were given did not even have basic services there. So that has inspired us a lot to look at those cities for future expansions of into the B2C segment as well.
Okay. Next question. Aditya Singh, how do you plan to balance your strong government partnerships with increasing B2C or B2B revenue streams?
So I would say these two segments are totally different in terms of the places that the government offers these tenders, etc. These are tier 2, tier 3, or civil hospitals, might be even some medical colleges, etc. But then those are a little not have any direct relationship with the B2C segment. Other than that, yes, if there is no facility available in the government side, then those under BPL kind of patients, etc., also have to come to the B2C segment. But otherwise, the B2C segment does not normally go to the B2G segment.
Next, Prathamesh Gandhi, are you planning to launch a mobile app or loyalty program for regular customers?
We we already have both of these things running, and currently they are in updation, and the new versions are coming out pretty soon.
Okay. Next question. Advait Reddy, could you elaborate on any innovations you're exploring in molecular diagnostics or genomics?
So genomics again came into the forefront during COVID, where everyone started recognizing that there is something called molecular diagnostics also, and RT-PCR, etc., started coming into the picture. We've had the RT-PCR, etc., kind of equipment for pretty long time, but now genetic testings, yes, that is also becoming the awareness is catching on, and that is the future of diagnostics. That the earlier you can detect a disease, the better you can take care of it.
Next question. The trade receivables have gone up significantly. Can you explain the reason as well as what is strategy to manage this risk?
So the trade receivables have gone up because in the past 18 months, we've installed almost 88 machines in the government sector. And the payment cycle, like I said, normally being 4 to 6 months, due to year end, etc., there were some issues which have currently now been resolved, and receivables days will come down.
Okay. Next, Ashwin Rao, can you walk us through your hub and spoke model as supported scalability while maintaining quality?
So the hub and spoke model, what we call as a hub is a center which has all kind of high-end facilities, especially in radiology, like a CT, MR, etc. And the spokes are basic centers which could have blood tests and X-rays or up to an ultrasound. So they act as small feeder units for the hub, for the high-end facilities. And in the area where the spoke is, we try to develop a market, and slowly that spoke also becomes a hub, and then it has its own spokes. So that is the scalability of it.
Okay. Next, Chirag Panchal, how do you manage equipment obsolescence risk given tech-reliant model?
Okay. The tech obsolescence is taken care of quite a bit by enhancements in your softwares, because there is a hardware part to it and there is a software part to it. The hardwares do not change much, but the softwares do change. So we have both strategies in place. We take care of obsolescence in terms of hardware as well as software.
Okay. Next question. Mithilesh Yadav, despite revenue growth, cash flow from operations is negative in financial year 25. Could you explain the reason and when you can expect normalization?
We would expect a normalization within this year, and like I said, last year we added a lot of government equipment, etc. So that is why the receivables have gone up, and we would expect it to get normalized within this year.
Next question. Amar Dusanj, how does Star Imaging differentiate itself from larger players like Metropolis, Vijaya Diagnostics, and Dr. Lal Path Labs?
Well, let's say Metropolis and Dr. Lal Path Labs are majorly into pathology. They do not offer radiology services at all. Vijay Diagnostics is a hospital chain also. So I would not put that also in our peer group. So we are a service provider of radiology and pathology, and we are more focused on radiology.
Next question. शंकर वर्मा, दिल्ली और यूपी से आपकी रेवेन्यू का मेजर हिस्सा आता है, इसके मेन रीजन क्या है और आपके नए जियोग्राफीज में एक्सपांड करने का क्या स्ट्रेटजी है?
दिल्ली यूपी, दिल्ली में हमारे B2C सेगमेंट के मेजर सेंटर्स हैं 4, और यूपी में हमारे 18 सेंटर हैं. सो इसलिए रेवेन्यू का मेजर स्ट्रीम इन 2 लोकेशन से है. और बाकी ज्योग्राफीज में एक्सपैंड करने के लिए, जैसे कि मैंने कहा कि हम और भी गवर्नमेंट टेंडर जो भी आते हैं उनमें पार्टिसिपेट करते हैं. करंटली ऑल्सो एक टेंडर में हम पार्टिसिपेट कर रहे हैं. So as and when we win any tender such that, we will be entering new geographies also.
Okay. Next, Deepak Mehta. How does your brand communicate trust and quality to first-time users in newer markets like Nashik?
Well, a little bit carries forward from our legacy, and rest is that we develop it based on our quality of reports and the service to the patients that we provide.
Okay. Next question. Rasika, how will the new equipment being purchased through IPO funds increase your daily testing capacity?
Uh, in radiology, there is a limitation of the number of patients that can be done on any given equipment and the number of given operating hours. So the IPO funds that we're utilizing in our increase in our equipment size, etc., will give us increased capacity on all these departments.
Okay. Next, अस्तिक कुमार, आपके टेक्नीशियन और रेडियोलॉजिस्ट के लिए कौन से ट्रेनिंग या स्किलिंग प्रोग्राम्स अवेलेबल है?
हमारे रेडियोलॉजिस्ट और टेक्नीशियंस के लिए हमारे पास जो भी जिन भी कंपनीज के साथ हम काम करते हैं, लाइक फिलिप्स, जी, सीमेंस, तोशिबा एक्सेट्रा, इनके साथ हमारे कंटिन्यूस ट्रेनिंग प्रोग्राम्स चलते हैं. जो भी नई मशीनें आती हैं उनके ऊपर ट्रेनिंग प्रोग्राम्स चलते हैं. कोई भी नए सॉफ्टवेयर मार्केट में आते हैं उनके लिए ट्रेनिंग प्रोग्राम्स चलते हैं. पेशेंट सेफ्टी के ऊपर ट्रेनिंग प्रोग्राम्स चलते हैं. सो जैसे कि हमने बताया कि हमारी खुद की इंस्टीट्यूट है स्टार रेडियो, उसमें हम टेक्नीशियंस वगैरह को उसमें भी अपस्किल करते हैं.
Okay. Next, Karthik Reddy, your EBITDA margins have increased significantly. What are the key drivers behind this profitability surge?
Azad?
Yes, sir. Talking about the EBITDA margin, as you could say, from the FY23 to the FY25, the major contribution that we have already discussed regarding the upscaling in the existing operations, and so all the different government vendors that we have been won in FY24 that has contributed to our revenue, and that revenue has gone to the profit that has contributed to our EBITDA margin, that we could see the increase in the margins there.
Okay. Next question is from Chavin Chaudhary. Do you offer loyalty programs, membership, or bundle test packages for retail customers to improve retention?
Yes, we have all of these. We have health memberships and we have health packages. Again, the differential between our health packages and the ones that you normally see on your WhatsApp is that we have comprehensive packages covering radiology also. I would say a blood picture doesn't give you a complete picture. You do need to actually picture it in a radiology test. So we have all of these.
Okay. Next, Kunal Bhatt, with an ROE of 41%, what's your capital allocation strategy for next 3 to 5 years?
This would be more of a forward-looking statement. I would not be able to give a correct answer on this.
We'll move forward to the next question. Rasika, do you have any plans to enter adjacent segments like wellness diagnostic, genetic testing, or fertility diagnostic?
So yes, like I already said, genetic testing we will be entering into, and wellness diagnostics we already have some like I said health packages etc. And we will be majorly entering into the home health sector segment.
Next, Amardeep Dosanjh, average working capital cycle for the company.
Azad, can you answer that?
Yes, sir. Am I audible?
Yes, Azad, sir.
Yes. Average working capital cycle, I would say, the company works in the three different segments: B2C, B2B, and B2G. For the B2C, ad is the upfront payment cash to hand. There is no such cycle would there. For the B2B, it's for 30 to 35 days there. Talking about the B2G segment that Sir has already mentioned, is when while filing the tender, the usually the payment cycle is mentioned over there is to 45 to 60 days. But as we all know, dealing with the government for the past few years and the experience that we have, usually it takes 4 to 6 months to recover that thing. And the for the three different segments, the three different working capital cycles are there, I would say.
Okay. Next, Manish Gupta, with 60.58% of revenue concentrated in your top 10 customers, what measures are you implementing to diversify your revenue base and mitigate concentration risk post IPO?
So in these top 10 customers, you would see the government as one of the biggest contributors. So yes, in the B2C segments, we have a huge number of customers which do not reflect here correctly in the form of percentages. But yes, we are increasing our footprint also, and we are increasing business with each and every participant also, each and every vertical that we have.
Next question. Rohan Jha, can you elaborate on the proposed utilization of funds raised through the IPO?
So the utilization of funds, like already explained a little bit, is towards our loan repayments. Some portion of it is towards working capital requirements. We will be expanding through, and some of it is in capital expansion, capital purchases. So the expansion that we will be doing, it has a gestation period also. So that is why we require working capital. So that's it, basically.
Okay. Next. Knowledge seeker. What is our right to win market shares versus the large-scale players in diagnostic sector?
So what you call as large-scale players, I would say, are more present in the pathology segment. They're not there in the radiology segment. And that is the major difference between a pathology and radiology segment is in a radiology segment, you have to face the patient and the patient faces you and he knows and builds a relationship directly with you. Whereas in a pathology segment, there is no such loyalty.
Next question. Can you please share some insights on why there's significant jump between FY23 and FY24 numbers and slightly less jump between FY24 and 25?
Talking about the FY23 and 24 figure that you could see there, before a little bit, we would like to discuss about the FY22 where the COVID was there, the COVID phase was there, and the revenue was way too high at that time because that was an exceptional year, not for us, but for the industry-wide, the healthcare sector. There was a jump, and as being the diagnostic center, we have conducted the test in the abundance at that time. Usually, what you see as the contribution of our revenue from the radiology and pathology, it usually 80 to 20%, but for that year only itself, it was around 45% from the pathology itself. And for the subsequent year coming to the post-COVID FY23, there was a downfall because of the post-COVID impact was there, and the people were also scared at the time to get the test done. And for the subsequent year FY24, there was increase in the business again. The business got streamlined, and the costs were need to be streamlined. And there was an increase in our existing business also. Then we have awarded the few business government contracts also that has contributed to our revenue. And as of now, we have not win any new more contract there in FY24, 25, and that you can see there's only slightly jump there. Otherwise, for FY23 and 24, only jump was there because we have awarded the 8 locations in FY24 from the B2G government.
Next question. Abhinav, thank you for the prompt answers. All the very best for the IPO.
Thank you. Thank you.
Looking forward, hope you grow all the best. I think we have covered majority of the questions. Pawan sir, thank you, Adad sir, thank you, Kunal sir, and all the best for the IPO.
Thank you, Kunal. Thank you. Thank you.
Thank you, everyone, and all the best, everyone.
Thank you, sir. Thank you.
Thank you.
Thank you.